Bitcoin is famous for its 4-year cycle. This date range trend goes all the way back to the beginning of its history. Let's have a look. I constructed a date range trend chart for the 4-year cycle using the following methodology. All of Bitcoin price history is considered on a log chart. The precise dates of market tops, marked in red, market bottoms, in green, and Bitcoin halvings, in orange, are identified on the chart with vertical lines. Horizontal arrows are used to connect key points from one cycle to the next in series in the following ways. For tops, tops were connected to the next top with red arrows. Bottoms were connected to the next top with green arrows. Halvings were connected to the next top with yellow arrows. For bottoms, tops were connected to the next bottom with violet arrows. Bottoms were connected to the next bottom with blue arrows. Halvings were connected to the next bottom with orange arrows. The horizontal arrows include the bar and day counts for the periods covered. The cycle information from before the 2013 market top was excluded due to distortions from the Genesis event. The day count information for the two mature cycles prior to the 2021 top were overlaid on the current cycle at their appropriate analogous starting points. These arrows are shaded, shown at the end of the chart. The end point of each of these horizontal day count projections was used to mark a prediction marked with vertical lines for a top or bottom event. Bitcoin dominance and purecoin price charts were included in a bottom pane for comparison to the date range chart above. Purecoin acts as a Bitcoin dominance proxy for market broadening information during periods when Bitcoin dominance did not exist as a metric. In the two previous cycles, the market broadening event occurred after the peak of Bitcoin. These two zones are marked in yellow. Zooming in closer to have a more detailed look at the market broadening events, we can see that they are actually very short in duration, with the 2017 event only taking 29 days and the 2021 event only taking 48 days. This zone, where you can see that the Bitcoin dominance falls to its lowest point over the course of this short period, is when microcap altcoins explode, as mirrored by the behavior of Purecoin during that time frame. When I produced these projections last August, I took each arrow of each color for the top and for the bottom, and I overlaid them from their appropriate starting points, marking the end of each of these arrows to create 6 independent projections, 6 for the top and 6 for the bottom. Between the nearest and the furthest of these projections for each of the top and the bottom, I marked a topping zone in red, as you can see there, and a bottoming zone in blue. The latest topping projection for the top of this market was the 27th of November. And from that point, I had overlaid the previous durations of the market broadening events of 29 days and 48 days, respectively, starting from that date to create a projection for altcoin season. However, as most people have realized at this point, that did not happen. There was no market broadening event, there was no altcoin season, and Bitcoin dominance did not drop, which does imply that the 4-year cycle, as far as altcoins are concerned, is undeniably broken. However, as far as Bitcoin is concerned, the date range trend is still in force, with the official market top of this cycle being October 6th, the nearest projection being October 2nd, the first of the red arrows. All the bottoming projections for Bitcoin fall between the 26th of September and the 25th of November, marking a 60-day period in which Bitcoin is expected to make its bottom. The centermost projection is for the 22nd of October, which is my resulting median projection for the date range trend for Bitcoin's bottom. Overlaying the election cycle and halvings on the zoomed out chart, we can see that the halvings always fall within the election year, and that this coincides with the liquidity cycle breakouts as discussed in a previous study. Given the information that we just covered, we can make the following observations. Date range observations are very consistent between the mature cycles, and projections for tops and bottoms cluster in a tight range. The full period clusters tightly around 1461 days, or 4 calendar years. Events are coordinated within the election cycle, with the same stages occurring in each year of the cycle. Bull markets are approximately 3 years, and bear markets are approximately 1 year in length. Altcoin returns are observed to aggressively diminish over time. Possible explanations include: 1. Liquidity cycles are coordinated with the election cycles and therefore drive the demand side of the crypto markets. 2. The halving event always falls in the election year, reducing supply when demand is about to increase. 3. The Bitcoin price is mainly governed by supply and demand on the free float, and that is dominated by fresh supply from miners. And 4. The total market cap of the crypto market has been growing according to a power law, and each cycle approaches parity with liquidity injections, explaining the diminishing returns. Avenues for further studies include total crypto market cap versus total scale of liquidity injections in cryptocurrency returns, liquidity dynamics within election cycles, and equity market behavior analysis of broad index versus individual stocks within election and liquidity cycles. The outtake from the study is that Bitcoin macro cycles are influenced by a number of independent and correlated components, including the election cycle, liquidity dynamics, and internal supply dynamics of Bitcoin. Another important outtake is that altcoins are no longer subject to the same liquidity rules as they were before, and the relationship between altcoins and Bitcoin should be regarded officially as broken. Not financial advice. Do your own research.